Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today.
Good morning. It's Monday, February 9th, and this is your New York Open Brief. Two themes stand out. Haven demand is back, with gold reclaiming the 5,000 mark as the dollar trades on the back foot. And politics is steering currencies from Tokyo to London, with Japan's election reset and UK turmoil tugging at the yen and the pound. Starting with the global macro tone, several desks see the dollar adopting a more defensive bias this week, with softer U.S. labor data and easing inflation keeping rate cut hopes alive. Rabobank flags a shift in global portfolio flows away from a pure Buy America stance, noting stronger Swiss and Swedish currencies against a weaker dollar and yen. That backdrop has helped gold stabilize near 5,000 after a volatile spell, while Bitcoin's attempted rebound is lagging as some investors prioritize the yellow metal. For traders, that matters. In Europe, inflation in the euro area undershot in January, and while the European Central Bank kept policy steady, the softer price data leaves the euro's tone a touch fragile. In the UK, government bond yields are pushing higher, and sterling is under pressure as political strains around Downing Street rattle confidence. Meanwhile, on the corporate side, chips are in focus after STMicro unveiled a multi-year supply tie-up with Amazon's cloud arm, a reminder that select tech capital spending is still rolling, even as bond strategists at Bank of America warn the stock market could siphon demand from bonds if rebalancing slows. Over in Japan, Prime Minister Sanae Takaichi's conservatives scored a landslide, propelling Japanese equities to record highs on hopes of supportive fiscal policy. The yen swung through the session, with officials signaling a desire for currency stability. But some analysts warn that a looser fiscal and monetary mix could weigh on the currency over time. Geopolitics keeps energy in play. U.S. and Iranian officials met in Oman as Tehran asserts its enrichment rights, a tense backdrop for Gulf supply risk. India is poised to cut Russian crude purchases after a U.S.-India trade deal, and Cuba says international airlines can no longer refuel there amid U.S. pressure. Net oil remains headline sensitive. Turning to markets and sectors, the mix points to slightly softer dollar sentiment, supportive for gold and select non-U.S. currencies, while UK assets face a political risk premium. Japanese equities have momentum, though yen volatility is likely to persist. Looking ahead, the near-term calendar is light, but eyes are on the U.S. jobs data later this week as a key test for the soft landing narrative. One U.S. legal development to note: a federal judge has ordered documents in a Georgia election case unsealed by Tuesday, a modest headline risk for the dollar. What you should be watching today: the pound against the U.S. dollar, with a downside bias as UK political noise lifts gilt yields and dents sentiment. The euro versus the dollar, looking for a mild downtrend if the inflation undershoot keeps policy expectations dovish. Dollar-yen choppy, with scope for near-term yen firmness on stability talk, but a medium-term bias to a weaker yen if fiscal support ramps. Dollar-franc a gentle downtrend as diversification favors Switzerland. And gold, an uptrend while the dollar stays defensive and geopolitical risks simmer. Oil, two-way risks with Iran talks and shifting Russian flows in the background. The takeaway: sentiment is cautious rather than fearful, with havens in favor and politics doing more of the near-term steering than data.
That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.